very respected speaker of this evening, and my beloved senior council colleague, Jomon from Kochi, Secretary of SIRC sir from Bellary, and other professional participating in this reference course on standards on auditing. Very good evening to all of you. I deem it my proud privilege to join once again with the elite professional gathering for this evening program. The subject of discussion being a wide range of areas to be covered, we have designed the course for a duration of 5 hours spread over 2 days. We have in our midst an erudite, effective and eloquent speaker, Jomon, who will take us through the scope, requirements, applicability, and the documentation on the various aspects governing SA 220, 300, 500, 501, 580. On behalf of members of this entire region, I welcome CA Jomon past chairman of SIRC, and express our sincere thanks and gratitude to him for sparing his valuable time to be here and upgrade our outlook on the subject of standards on auditing. He has widely traveled and acclaimed the speaker in different forums across the region. His rich experience and expertise and the inputs he had received from different places would be an added advantage for us to know more about standards on auditing. I am happy to welcome each one of the members for this important refresher course. I am sure you will get a lot of take home out of this refresher course. Yes, you are aware that most of states in southern region is under a total lockdown, but SIRC never showed laxity in offering continuing professional education to its members. Our efforts in the last 15 months to reach out to your doorstep shows our determination to be in close and constant touch with the members of this entire region. SIRC assures that it will continue to explore new avenues to disseminate knowledge on contemporary and futuristic topics of professional interest. Though most of you know today's speaker personally as a customary nature, before going to the technical topic, we have to introduce the speaker for the audience. I request C.A. Panarai sir, Secretary of SIRC, for the brief introduction of the speaker for the benefit of the viewers.
Thank you, Chairman, for setting the tone for the day's program. And I take the pleasure of introducing our own regional colleague and the immediate past chairman of the SIRC, Jomon K. George. I once again welcome you, sir. He is a fellow member of the Institute with 29 years of diversified practice experience. The chairman of the Southern India Regional Council of the ICAI Institute for the year 2019-20 before the lockdown started. He is a mentor Philip Woods, a multidisciplinary accounting and consulting firm based in Dubai, and his firm has 8 partners. It's a very specializing in corporate audits and consultancy. He was faculty for auditing of the Institute of Chartered Accountants of India, and has taught more than 10,000 CA students. Regular resource person on professional circuit on accounting and auditing standards and corporate audit. He has done more than 800 presentations. Also a peer review trainer. As member of the Auditing and Assurance Standards Board of ICAI, the chairman of ICAI Ernakulam branch 2002-3, and has traveled extensively in the UK, Middle East, and Far East. Past president of the Rotary Kochi Central, and member of the various social clubs. Honorary Treasurer, Kerala Management Association, member, Advisory Board, St. Erasmus College, Ernakulam. With this brief introduction, I welcome you again and over to you, Jomon sir.
Thank you very much for the very detailed introduction. Very dynamic, young, our smiling chairman of the Southern region, my very dear friend, my younger brother, C.A.K. Jalapati, the secretary of the region, very seasoned professional, Pandaj sir from Bellary. The duo is doing a wonderful job, as the chairman said, in these difficult times when we are finding it so difficult to get together, travel and meet. Using the best possibilities of technology, the duo is keeping, with the good support of the office, the joint director and the entire team there, doing a wonderful job in engaging the members and students and with very, very value-adding, highly value-adding programs. Saturday, I had the good fortune, rather, I was fortunate to attend the program on company audit by C.A. Himanshu Kandawal from Mumbai, Ahmedabad. I think Ahmedabad, right, Chairman? Yes. And Mumbai, yeah. And it was a real wonderful session attended by close to 500 participants. And as a sequel, I would say the chairman had decided, he was calling me from mid of April, that we should have a program on standards on auditing, we should structure it. So I suggested probably if I suggested that we do it, and then tomorrow also, it is a 2-day program. I would say that a refresher on standards on auditing, covering about 10, 12 of the very important standards on auditing. My compliments to chairman and the team for organizing this, and a big thank you for making me part of this empowerment program. And the office team there and the close to 400 members were logged in for this webinar, with the view to probably renewing and recapitulating the developments, or rather the application of standards in auditing, which have become mandatory, which have been mandatory, and the Companies Act 2013, as the presentation unfolds, you would become clear how important it is and how mandatory to comply with the standards in auditing. And the chairman and secretary would put, I think, a lot of thrust on standards in auditing. 2 topics which last year the council has made mandatory for all program organizing units, regional councils and branches. The one is standards on auditing, SA. There's a reason for that. I'll come to that a little later. The second one is the new code of ethics, which has fallen in place from July 2020. So this is how we are here together this evening, fine evening, I would say, though we are Kerala, we have a lockdown till 16. So we are all, but then never stopping the learning process, the interaction through the best possibilities of technology. So good evening to all the participants. Thank you for joining in large numbers. This introduction, let me slowly move on to do my PowerPoint presentation. Let me try to share the slide now. Is it enabled, Selva? Chairman, am I audible, loud enough?
You're audible, sir, but the screen is not yet visible, sir. The third button right below the orange arrow.
Yeah, the screen, I'm going to do it. Sharing.
Yeah.
Yes, sir. Yes.
PPT, sir.
Yeah, PPT. I'm just trying to share. Just give me a minute. Show screen. Yeah, show screen is coming up.
The screen is visible, sir. You need to click on PPT so that we can see the. Right now, you're seeing the desktop screen.
All right. Okay.
Yeah, visible, sir. You can run a slideshow, sir. Now. Yeah.
It's visible now.
Yeah, visible, sir.
Yes,
it's a full screen.
No, sir. It's a normal PPT. You need to run a slideshow. F5.
All right. Just give me a minute.
Yes, sir. Visible.
Is it okay now?
Fine, sir.
Full screen, sir. Yeah, continue.
Yes, okay, sir. Okay, sir.
Yeah.
Or would you like to have a break in the middle or continuous to take 50 hours?
Let's see. Secretary, let's see. I don't think I would need a break, but depending on the mood of the audience, we'll see. Is it okay now? Can I proceed?
Yes, sir, please.
Yeah, you can proceed, sir. You can proceed.
Yeah. So standards and auditing, as I mentioned, SIRC has very thoughtfully conceived this, and we are here together to update our knowledge on standards and auditing. Before I go into the specifics of the standard, let me just dwell upon the history and evolution of standards and auditing. You know, the Auditing Practices Committee, the institute was set up in 1949, and then it took so many years to set up an Auditing Practices Committee in 1982, and the APC was issuing what is known as Standards Auditing Procedures, Statements on Standard Auditing Procedures. SAPs, they were called briefly. And in 2002, the standards were renamed as, the board was renamed as Auditing and Assurance Standards Board, like we have the International Auditing and Assurance Standards Board, the IFAC. And consequently, the standards were renamed as AAS, Auditing and Assurance Standards. And 6 years later, there was a thorough overhaul looking out to the international best global practices. And in 2008, a new preface was introduced to auditing standards and standards on auditing, assurance, related services, review and related services. Auditing, assurance, review and related services. And with that new preface in 2008, there was a new classification. We have a new classification now of the old list of standards. They're broadly classified into SQCs, Standard on Quality Control, and we only have one SQC1 as of now. And the SA 220, which we are going to discuss now, is an expounded version which carries the spirit of the Standard on Quality Control. Other standards are collectively called engagement standards, which includes, or which rather comprises of, standards on auditing, what we are going to discuss today. SRE, standard on review engagements, the limited reviews that we do for listed companies, quarterly and half yearly for companies whose debt securities are listed. So limited review, that is review engagements. Assurance engagements, the certifications that we do, other than audit, all the assurance engagements. SAE 3400 is something probably time permits we'll discuss. And lastly, standard on related services. A very important point there as well, though we are discussing essays today, towards the end of the presentation, if time permits, I would like to touch upon SRS 4410, about which there is a disciplinary disciplinary committee decision, which is reported in the latest journal of our institute. SRS 4410, for information, deals with compilation engagements. The undesirable practice of signing provisional financial statements or just issuing a compilation report has been put to check, rather has been found guilty by the disciplinary committee. We'll come to that a little later. So this is a new classification with which we are moving forward from 2008. That has been a major shake-up, rather revolutionary change in the sphere of standards and auditing. Now, let's quickly look at why we should comply with standards. To expedite audits, and I would also say assurance engagements effectively in accordance with the generally accepted auditing practices. There cannot be a wayward approach. Our profession has been there for more than 70 years now, and we have a uniform code of, I would say, uniform code of literature how to go about discharging the audit functions or the attestation function, as they technically call it. So therefore, that's very important. And the second one is to utilize the resources effectively. The auditor brings in a lot of resources into the audit process. The domain knowledge that he has, time is a huge resource. I mean, it has to be judiciously managed. The team, the audit team, the students, the article clerks, all of them, the audit managers, all of them who are brought into the audit are all resources. This have to be effectively coordinated, and therefore for that we need to comply with standards in auditing. To guide, direct and supervise assistants properly. In large audits we may need a lot of students, article clerks, therefore their work has to be guided, directed and supervised, which is also a quality control measure. Moving on, we need to have quality control. Yes, to ensure quality control, we need to comply with standards. We have to plan the audit, collect evidence, document it properly, and so on. To disprove charges of negligence. See, our country so far has not become very litigative on the audit failures, though there have been issues like Satyam, ILNFS and all that recently. But then if you look out to the West, you would see that there are multi-million, even billion-dollar cases which are filed for audit negligence, where the investors have been misled by the auditor's opinion. Therefore, that will also soon emerge. So even here, we have NFRA now, new regulators. So therefore, we need to be, our work has to be really defensive. To be defensive, we need to comply with standards. Last and equally important is that the peer review process is actively there. To apply for peer review, SEBI had issued a circular at some point of time, which is not being enforced, that the listed space, companies in the listed space have to be audited only by firms which have been peer reviewed and who hold a valid peer review certificate. My firm, just to strike a personal note, applied for peer review and got it done, and we got a peer review certificate about 18 months back, which is very prominently displayed in our office, saying that the institute has acknowledged that our processes are mature enough to be granted a peer review certificate. Okay, that's a part of branding, about which probably towards the end of the session we would discuss. These are the generic points as far as the compliance with standards are concerned. But the more pressing requirement came way back in 2013. We are 8 years into the new Companies Act 2013. Section 143, which is captioned as powers and duties of auditors and auditing standards. I repeat, and auditing standards. Subsection 9 is a it's a single line. Every auditor shall comply with auditing standards. On a very forceful, very demanding line as far as the professionals are concerned. Now, this is the Companies Act applicability, therefore this is mandatory under the Companies Act. What's the huge difference? Till 2013, when where we got the auditing standards got the much needed statutory teeth for the first time. Till that time, only the institute could take disciplinary action against the erring auditors if there is non-compliance with auditing standards, because they were mandatory. Auditing standards are mandatory by their very nature. All the auditing standards are mandatory. There is no sector-wise, segment-wise, category-wise exemption, nothing. They are all mandatory by their very nature. Therefore, that was the situation. So here, now after that, now the MCA can take action against you. The NFRA is gaining very strong footing, taking action against many erring auditors. They had penalized in the case of ILNFS, one of the multinational firms. 3 of the partners were, barred and then also levied penalties running into lakhs of rupees. So therefore, that is something one has to be extremely careful. 143.9 makes it mandatory under the Companies Act. Now, before moving on to the other specific standards, let's also see what is the situation in non-corporate audit, specifically referring to tax audit, income tax audit. Of course, we are all worried that the limits have been raised. Once the transactions are 95% through the system, or rather bank transactions, digitized transactions, then the limits have been raised. But still, we do a large number of tax audits, audit under the 44AB and 44AD of the Income Tax Act. There, if it's a 3CB, if it's a Form 3CB, a non-corporate tax audit, yes, there is expression of opinion of true and fair. Therefore, standards on auditing would squarely apply in toto. Whereas in Form 3CA, which is the statutory audit, or rather tax audit of a corporate entity, for which the statutory audit has already been completed, we are not expressing an opinion on the financial statements. Opinion has already been expressed in the company audit report. If CARO is applicable, CARO report, the main body of the report under 143.3, all that has been expressed. Therefore, corporate tax audits, the applicability is less because there is no applicability is not there, because there is no expression of opinion. I hope I have driven home the point. And we can take questions, not individually. I think the chat box, Selva, will help you. Then we will discuss try to answer the questions towards the end of the session. Or if there need be a break, probably We'll take a break and take a few questions as the secretary suggested, and then we'll move forward. So this is the backdrop in which the applicability of standards is the backdrop, the importance of standards in auditing. Now, before moving on, let me also say that the issues around that, the level of compliance is dismally poor amongst the members. The findings of the FRRB, I hope you're aware that we have the financial reporting review board, where they review the financial reporting done by large corporates, listed and unlisted, large unlisted corporates. FRRB, the findings say that scant regard, if you put that, the scant regards to standards in auditing are not being followed. Secondly, when it comes to non-corporate audits, what I mentioned, the 3CB cases, non-corporate tax audits, the QRB had come out with a lot of findings, where they found that the documentation done by the auditors, the kind of evidence that should have been collected, which has actually been collected, there's a huge gap and so on. So today we are under the lens than ever before. Internally, we have the peer review. FRRB would take up some of the financial statements who have been audited by you. And the QRB in the non-corporate space, tax audit reports would be taken up for scrutiny. And therefore, the lot of multi-level entity, or I would say that different agencies, or rather boards who are looking into the compliance aspect. Therefore, it's very important that we comply with these standards. Very recently, let me give a very practical example. A friend of mine from Central Kerala, a small town in Central Kerala, received a notice from SFIO, Serious Frauds Investigation Office. He was the auditor of 2 small companies, which belonged to a group of companies in which one company had some public deposits and there was some irregularity. That was in the news, and therefore the investors could not get back their money. This auditor, my friend of mine, had done only 2 small companies in the group, but then SFIO has taken the group as a whole and issued a notice to him. And we discussed that, and the documentation he had done was fairly good. There was confirmation for the fixed deposits, all those things fairly well, so we could answer. But then I would like to inform you, the first question which SFIO had asked, there's a long list of questions. The first question was, provide all the evidence to establish that you had done the audit in accordance with applicable auditing standards in India. SFIO to the audit of a small private limited company, which unfortunately for my friend belonged to a group which went into some irregularity. In these 2 companies which he was auditing, he had collected evidence, he could substantially, but still, then we look in, everywhere, every one of us can have some gaps. Therefore, this is the way the regulator is looking at. Their awareness is substantially more than probably some of our fellow members. Therefore, this is the background in which, with a little scare, that we should approach the situation. And scare is not enough. More of compliance has to fall in place. So from that standpoint, I would once again compliment SIRC for organizing this program. And on day 1, thank you for giving me this opportunity on day 1. And tomorrow, a very senior professional whom all of us respect. I have had a lot of professional interaction with her. Madam Bhavani Balasubramanian of Deloitte is addressing on the reporting standards. All of you should attend that as well, because in reporting sphere, new things like SS 701, key audit matters have come. Though in the listed space, it calls for a lot of detailed disclosures. Auditor's report is becoming lengthier day after day. And then the regulators are also looking at the audit reports more seriously than ever before. So with that introduction, let me move on to the specific standards. We are going to discuss 5 SA 220, that is quality control, SA 300 planning, jumping on to SA 500, which is evidence, 501 audit evidence and extension of that, specific items, special considerations, and SA 580 written representations. But before go into SA 220, since tomorrow we are covering only reporting standards, I would like to take probably 5 minutes on 2 of the standards which are preceding SA 220. I hope you're aware of that. SA 200 and SA 210. And again, the standards in auditing this time around, like we did last year, the institute has come out with 6 COVID-related pronouncements. There was a joint advisory by ASB and AASB. That was the first one which came out towards the end of March last year. Maybe 10-15 years, 10 days into the lockdown. Kudos to our ASB and AASB, came out with a joint advisory, standardized approach. From auditing point of view, physical verification, which could not be done on 31st March 2020, subsequent events, going concern, special audit reporting, special considerations, and so on. All these are very important. But then that is where I thought I'll bring it as a pointer to SA 200, the revised SA 200, which used to be, overall objective of the independent auditor and the discharge of an audit in accordance with standards in auditing. This standard, for the first time in 2008, belatedly brought in the concept of professional skepticism. So all these COVID pronouncements, if you read through, I had done an analysis and I had done a presentation to at least a dozen branches across the region last year on these COVID-related pronouncements. The common thread in all these pronouncements is that the concept of the aspect of professional skepticism should stand amplified in situations which are not very normal. COVID is a very abnormal situation. Last year, take for example 31/3/20, none of us were able to be at the client's place doing physical verification. And the lockdown created that subsequent events, many of the materials would have gone obsolete, not usable, would have perished and so on. Subsequent of the closure would have raised a big question on going concern, whether the entity would be able to pull on for a long time because there was stoppage of business and tourism industry, for example. I'm sitting in Kerala where all of us have, every state has got, but we are so much on tourism based. The loss which is happening every day is phenomenal. And they are really reeling under pressure to retain the minimum staff, pull on. All those things are there. Therefore, these points have to be kept in mind. So the professional skepticism is something which is very, very important. In SA 200, that's the only leaf I would take out of that standard as a prelude to our discussion on the other standards. Now, what is the skepticism? Being a little skeptical is that we should not take explanations, documents or papers, people for granted. Take it with a pinch of salt. Take it with a pinch of salt. And today, also we say that, sir, we trust you. We trust you. We understand what you're trying to say, but still we would like to verify. That kind of, in layman's terms, when you put it across, this is the way I would like to express that. Sir, this is the way we would like to verify and move on. Let's have some more paper, some more document, some more assurance, some more reliable information on a particular audit point, an assertion that you are making. This is very, very important. And when we talk about taking with a pinch of salt, recently in the media you would have seen our honorable president Nihar Niranjan Jambusarya sir making a statement that the auditor is only a watchdog and not a blood hound. It's an 1872 decision in the Kingston Cotton Mills case, 1872 if I remember correctly. But it's slowly getting outdated. I was reading an article in the Business Line written by my very dear friend Mohan R. Levy, a very knowledgeable person from Bangalore. He's saying that the profession has been clinging on to this decision for many years, more than 100 years now, saying as an insurance for not doing things the way it should have been done. So the president's message is also clear. Times have changed, and therefore, while there's a huge expectation gap, the audit cannot become a blood down. That rising from the watchdog status a little bit, and if you ensure that the standards in auditing are complied with, and then in case if you need certain standards like the fraud, the standard on fraud, SA 240 and all, expects the auditor to blow the whistle outside the organization, even to the regulator. So with that only, the Kingston Cotton Mills case would hold good. And I would strongly recommend every one of you reading an article on SA 240 again on fraud written by a very, very learned person, P.S. Kumar sir was a former chairman of SIRC, and sir, I called him because after reading the article, it so in-depth analysis and it sent a clear warning that let us not play around saying that okay, we'll not do only this much and we cannot do deep dives. Of course, audit is not an investigation, but today we are seeing circumstantial pressures. There are fraudsters everywhere. We are seeing corporate fraud, so many of them. Therefore, one has to be extremely careful. So these two things are very important. SA 200, the aspect of professional skepticism, taking things with a pinch of salt or pepper if need be. And of course, the article on SA 240, which is a real eye-opener and a pointer to how we should deal with situations like that. So that's about SA 200. The crux of the standard SA 200 is that every audit should be done. Every audit should be done in compliance with standards and auditing. The auditor should exercise all the due care and diligence. The auditor, for example, very briefly it says the auditor should plan the audit properly, which is expounded in SA 300, which is topic for our discussion today. The auditor should collect sufficient appropriate evidence to establish, to substantiate his opinion on the financial statements, true and fair. SA 500 expounded. Today we are discussing that. The auditor should document his work properly. SA 230. It's not topic for a discussion today. Very, very important standard. SA 230, very, very important standard. So on the story goes. So, and it also says that the auditor should make sure that all the applicable standards are complied with in discharging the audit of the function. So the overall objective of the auditor is to express an opinion on the financial statement. The concept of true and fair. We can discuss for hours together what constitutes true and fair. The financial statements should be devoid of material mistakes, irregularities, material omissions. We talk about existence, completeness, occurrence of transactions, and so on. Those are the basics. So that is about SA 200 in general. SA 210 is something which very important standard, agreeing on the terms of audit engagement. So the action point today, when we discuss these 5 standards, after every standard is discussed, I would really like to discuss with you what is the action point. We have been attending a lot of seminars. Are we putting that to place? It's like going to a doctor or saying that okay, I have some problem. Let us not say breathing difficulty now, because that would send a wrong message. I have a mild pain. Which chest pain which is there. So whether it's a gastric issue or a cardiac issue, and the doctor gives you some advice in saying that okay, you should reduce weight, you should do exercise regularly and so on. But if you're not doing it, there's no point. So action points are very important. After every standard, we'll take 2 to 3 minutes on asserting what the action that we will kind of like an oath we will take that. So SA 200, when we talk about, before moving on to SA 210, SA 200, the action point is to take an oath that I would probably reposition, I would re-engineer myself to make sure that the audits done by my firm, my office, comply with all the applicable standards, for which I will develop more of practical knowledge on this, make sure that knowledge is applied at the work desk. Through my team, I would give internal training. Many of us do a lot of internal training, but large number of firms, the students, the articles are taken for granted. So they have to be regularly imparted training. I would also say that good SICASA programs, you should encourage them to attend. Today, we have no shortage of students in the new scheme. So, so with that kind of a thing, the action point is to say that I would be more aware about standards and auditing. I would apply them at the work desk, and I'll empower my team, equip my team with more of practical knowledge, which would be applied in every audit. That is what we would take on SA 200. With that 210, agreeing on the terms of audit engagement. The standard has an appendix which gives a format of a letter of engagement. The auditor, the communication, our relationship with the client may be a long-lasting relationship. 10 years he has been my client. But then I think there is a need, after sometimes becomes very casual. We'll say that, can we do the audit? It's time to start the audit. Okay. So please, let's that, informal, that kind of, All these kind of discussions have to be formalized. Yes, we can start. Please give us appointment letter. If you are the first auditor of a company, insist on the board resolution. If you are appointed by the general meeting, insist on a general meeting.
1 minute, Selva here. Are we on the same slides as Companies Act, or else have we moved on?
Yeah. I'm still on the thing only. Yes. Next slide. Next slide is 220. So 200 and thank you, Selva. 200 and 210. It was not part of the topic, but I thought that is required to have a stepping stone moving on to 210. That would be over, and then move on to the slides. Thank you for reminding, Selva. You can interrupt whenever required. Okay. Thank you. Okay. So this slide is very important. Companies Act slide is something like a warning signal. It should keep blinking that it should register in every one of us. Those who are doing company audits. All of us are doing company audits, right? So 210, the letter of engagement has to be obtained, signed, and one more thing I would strongly recommend is that in order to avoid disputes, in that it talks about the fees as well. Why don't we agree on the fees? Agree on the fees. Discuss that with the client. Sometimes we are all a little scared. The client feel bad. Can I increase the fees? This time around, we have voluntarily reduced the fees in some of the cases where the client was undergoing facing a lot of difficulties. Similarly, when the client's volume of business increases, the time allotted, the resources required for an audit goes up, we should raise the fees that would commensurate with the efforts and the time and the expertise that we bring into the process. And that is very important. So that is about SA 210, agreeing on the terms of engagement. The action point there, I repeat, the action point should be that before starting an audit every year, I would obtain a letter of appointment. But in the case of Companies Act today, appointment is for a period of 5 years. After the first audit is appointed by the board, the 5 years, therefore, every year an appointment letter is not required. But terms of engagement, if there are changes, for example, CARO 2020 comes in. CARO 2021 comes in. Yes, there should be some change in the engagement letter, and its letter of engagement. It's a format which is given there. It cannot be standardized. Do customize that for the need of that particular audit and obtain letter of engagement. So action point 1 was oath on complying with standards in auditing. SA 210 action point is that obtain letter of engagement. Obtain letter of engagement for all the audits before getting the audit started and agreeing upon the terms. In the case of a company audit, I surely agree with every one of you that the scope of the audit is largely determined by the statute itself. Even then, an acknowledgement from the client saying that these are the things that would be done and we agree on those terms is very, very important. So with that, the stepping stones of 200 and 210, let us move on to this discussion on the quality control for an audit of financial statements. SA 220. So very, very important standard quality control. Now, if I ask a question, I've been teaching for 20 years, auditing I was teaching for 20 years, and I was also fortunate to serve Auditing and Assurance Standards Board in 2005-06. Thanks to Manoharan sir, T.N. Manoharan sir, when he became Vice President of the Institute, I used to interact with him on auditing standards and peer review process that just started. And he just over a call, he said, Jomon, I'm planning to co-opt you or nominate you onto the Auditing and Assurance Standards. A great learning experience for me. We had 11 meetings in that year, 10 in Delhi, and the last one was in Mumbai, where we also had the opportunity. Amrit Chopra sir, who later became the president of the institute, a very learned person, was the chairman of AISB in 2005-06. I could work under him. I could work with late Rahul Roy sir. And the last meeting, we also had an interaction with Graham Watt, the then president of IFAC, who was on a visit to India. And he asked this question on the development, or rather evolution of auditing pronouncements in the country, which was very well answered by Amrit Chopra sir. A very, very great learning experience. And in a small way, I feel I could contribute as well as a much younger chartered accountant, got a lot of spare time for reading and learning at that point of time. Learning has to continue. There's no stopping of that. So this QC, when we talk about, yes, how do we bring, so 20 years when I was teaching, I used to ask this question to the students. How do we bring quality into an audit? How do we bring quality into an audit? QC, when we buy certain electronic components, I remember the bulky emergency lamps which we used to have. When the supply goes off, that will get switched on. On the back of all those equipments, when we buy, there's a sticker, a round sticker says QC passed, quality control passed. So if somebody has to put a sticker on the auditor's report issued by every one of us, what are the things they would look into, or rather we should be sure of? How do we bring quality into an audit? I would say one is about an attitude. The audit is a serious business, cannot be taken casually. It is not an annual ritual. That is the attitude which makes a difference. One. Two is that to have good processes, not byword practices. Good processes in the sense we are talking about compliance with standards and audit. And thirdly, to have a good team. So attitude, processes, when I say good team, people, good people, trained people, people who are charged, people who are inspired, people who are instructed, reviewed, supervised, and so on. This may sound theoretical, but look at the way many of the small firms may not have that many people, but even if it's 5 to 6 people, keeping them engaged, keeping them regularly informed about the changes, updations are very, very important. We live in a very, very dynamic environment. Sole practitioners are finding it so difficult to manage. Knowledge management is a huge challenge. Change management is a huge challenge. But today, with the bank audit, the new RBI regulations would probably see that individual firms, proprietary firms may not have bank audits looking into the future. There will be a lot of partnership being formed. So grow in size, and the baseline of our firm is bigger, better, bolder. We're trying to be that, growing bigger in size in terms of deliverables, better, improving the way that we do things, bolder, taking bold initiatives, adding a new partner, young partner, opening an office elsewhere, expanding. And all those things are very, very important for every well-meaning firm for whom growth is still on their agenda. Now, not straying from the topic here. So quality control is about attitude, processes, and people. And this standard expands or expounds these three things. Deals with specific responsibilities of the auditor regarding quality control procedures for an audit of financial statements. That's a generic statement. The objective of the auditor is to implement quality control procedures at engagement level that provides the auditor with reasonable assurance that the audit complies with, look at that, professional standards, SS, okay, regulatory and legal requirements. This is very important. The financial reporting requirement in our country today, we have accounting standard compliance. Many of them are mandatory. For large corporates, all accounting standards are mandatory. For companies with net worth exceeding 250 crores, Ind AS is applicable. For others less than 250 crores, the accounting standards, which we studied and learned, are applicable. Therefore, that's a regulatory framework. Legal requirements, we have, the Companies Act. There's a prescribed format. The Companies Act Schedule 3 gives the format in which financial statements are required. The information which is to be the content over form, information which is to be given. Division 1, Division 2, and Division 3. Division 1 is non-Ind AS. Division 2 is Ind AS. Division 3 is NBFCs. And therefore, the auditor has to make sure that the audit complies with professional standards, requirements, legal and regulatory requirements. And let us be reminded that the Companies Act, the Company Auditors Report clearly says that give the information in the manner so required. Therefore, all that compliance with statutory requirements when it comes to presentation, disclosure, content, all that has to be ensured. So quality control should take care of that. And lastly, the auditor's report, very importantly, the auditor's report issued is appropriate in the given circumstances. What are the different type of auditor's reports? We have a clean report saying that, okay, X is a good boy. Then we say that except for, let me also remind you here, though that is topic for Bhavani Madam tomorrow, except for, we don't use the term subject to, except for, we will give a qualified report. When we give, saying that subject to certain things, except for certain things, X is a good boy. Okay. Then the third one is the disclaimer, where we say that because of lack of information, on various reasons which SS 705 tells us, that is called a disclaimer. We are washing off our hands. And fourthly, very extreme situation where we issue an adverse report, very bluntly saying that X is not a good boy, with the reasons there too. What are the reasons? Because of this, X is not a good boy. So 4 types of reports we have. So the auditor's report issued when the situation warrants an adverse report, the auditor should not be giving a clean report. And when it requires a qualified opinion only, it should not result in an adverse opinion. So the quality control processes should take care of, make sure that the auditor's report issued is the most appropriate in the given circumstances in that particular audit. Moving on, the specific requirements which this quality control standard lists out. The first one is the leadership responsibilities. So they have used a lot of terms: engagement partner, quality control reviewer, all those things have used. So the engagement partner, the partner in charge, should take the leadership for ensuring that there's a proper quality control. The measures we have seen: people, processes, attitude. We can have a quality mission statement also. It's very important. So that's about the leadership responsibilities. There has to be a captain. Students, assistants might do an audit before finally one lays his hands on the financial statements, attesting them to be true and fair, etc. The leadership responsibilities should be clearly laid out. Ethical requirements. The matters of independence, a lot of independence threat today. So SQC1 also refers, the Code of Ethics refers to SQC1, and of course SQC1 is, of course, SA220, a lot of things in common. So the ethical requirements laid down by the institute, the ethical framework that the institute have today, the ethical compulsions that we are subject to, should be essentially be part of the audit considerations, and one should work within that framework. Independence, I did mention. There could be familiarity. There's something called familiarity threat. If you see in the new Code of Ethics, something called the familiarity threat. 10 years association, 20 years association, distant relations, my old schoolmate, college mate. So that might all have a threat on independence. Therefore, that has to be very objectively evaluated and make sure that the auditor is actually able to act independently. Acceptance and continuance of client relationships. So there are 2 things. One is the filtration, or rather what we call it as a screening that we do while accepting a client. There have been many situations in Kochi where we have refused to accept certain assignments, knowing that the people behind, or rather the company the company directors are people who have been in the news for something which is not very desirable. Therefore, we gave some excuse and said that we are not really happy to accept this assignment. Okay. And then again, this can happen 3 years, 5 years into the audit. You will find that certain practices, unhealthy practices, are crept in, and they're not refusing to change. They are refusing to move on the path of righteousness. Therefore, sometimes we may have to weed out clients. So therefore, that's very important. Acceptance and continuance of client relationships, under that heading, these are the 2 things: screening at the acceptance stage, and if need be, after some time, you may have to. There is no commitment to any client that I would be your auditor for the rest of my life or rest of the life of your entity. No, nothing like that. So that is what it is. Assignment of engagement teams. So we have in my firm, we have about 50 plus articles in Ernakulam office, Cochin office, about 18 to 20 in Trivandrum office. And today, when an audit, big audit, not a very small one, a medium-sized audit when starts, the engagement partner would decide on a team, a mix of seniors, semi-seniors, juniors, and then the students would be called into the cabin. Now that's not possible. That's happening online now, and we are reasonably imbibed. or rather adapted the technology which is required, and we are able to access the real-time access to have the servers with a lot of restrictions. Data security is a concern, but that's more talked about, not really solved. But then today, clients are also a little, I would say, most of the clients just mail across their tally data. The sanctity and the divine nature of that client records are slowly getting lost anyway. So this engagement team one would sit with and give the required instructions. When we come to SA 300, I would discuss more about that. And then during the performance, it is not that we have a weekly reporting system, and before COVID and in between this, what's that called, the COVID 1 and COVID 2, then second wave, first wave and the second wave. We used to have monthly, weekly meetings every morning. The team would come and discuss with the partner in charge. So after the engagement performance have been reviewed, directed properly, reviewed periodically, consultation has to be done. So all those things are very, very important. Consultation is intra-firm. My partner would come and ask me something. If something on taxation or GST, that's something which I would consult the partner. Inter-firm and intra-firm, intra-firm and inter-firm. You can discuss. A lot of charter accounts, we are friends. Today, I'm seeing, I was keeping away from social media 4 months back. Out of certain compulsions, I had to have a WhatsApp. I took a WhatsApp number. Now I see that a lot of questions are being raised, consultations happening on social media in groups. For example, there's a group called, let's say, Charter Accountants of Tirupur. There, between them, ask, I have a question like this, and quick comes the answer. Therefore, without disclosing the client and all that, that kind of consultation is also encouraged as part of improving quality. And then, of course, again, that also we take it to with a pinch of salt. The quality control process itself has to be reviewed periodically, and that's very important. Monitoring the quality control processes, the work done, that's all very, very important, and another important requirement. And lastly, the QC policy, the steps taken by the firm or the audit firm to ensure QC has to be properly documented. Quality control policies and procedures should be implemented at the firm level and the individual audit level. Firm level, we talk about that attitude thing. That's a macro perspective. That yes, no audit report should be issued. No. Take for example, you did. I get a lot of calls from members saying that one bill was left out. Okay, what do we do? So it's a system driven. That's a check. So therefore, make sure that before I sign, I make sure that the hard copy which I sign, the UDIN is mentioned. Similarly, at the firm level, make sure that all the standards. We have again striking a personal note. I'm not saying that the processes which we follow are perfect and impeccable. No intention to say that. All of us are subject to improvement, and therefore, we have a few years back started something called checklist for a partner signing the balance sheet. Checklist for partner signing the balance sheet. Finally, as a managing partner, even if it is not on the same day, it comes to me for a cross check, making sure that all that checklist process are being complied with. Okay, then only that the partner signs. So the firm level and individual audit level also, this will then percolate to the individual audit level. QC policies and procedures should ensure that all the audits are conducted according to standards and auditing. Goes without saying. You should incorporate professional requirements, skills and competence. The team, the empowered team, assignment, proper instructions to the students, delegating work, consultation we mentioned, acceptance of clients and monitoring. That's a repeat of what we have discussed already. Must be communicated to its personnel. That's very important. See, for example, the partner is, like say, a very strict partner. He has a lot of respect and regard and knowledge about the standards on auditing or professional requirements. Then unless that becomes a common thread, it becomes a spirit or rather a work culture, becomes part of the DNA of the firm, it really doesn't help. So that is the first bullet point. And QC procedures appropriate to the individual audit has been applied. So customized QC policies. That is what we talk about the individual audit level. The auditor should also consider the professional competence of assistants performing work delegated to them and deciding the extent of direction, supervision, etc. I did mention. Then audit. So normally what happens is we have third year students, second year students, first year students. Our firm, for example, is predominantly student based. We have a very minimal paid staff, the receptionist, or again striking a personal note, office boy and a few trainees, most of them out of certain obligations, and we help them get a job and they might blossom forth like that. But otherwise, predominantly it's large number of students. But third year today, every firm is facing that challenge because the leave for final exam. Then you also have the 15 days modular training, that is called the advanced integrated course on information technology and soft skills, which has to be completed. So that 1 month goes for that. And let's say if you're giving 3 months of leave for the final exam for setup, then 4 months into third year goes for that. Therefore, even with all that, we should have a right mix of seniors and juniors in developing the audit team. That's the point which is being driven home in this particular slide. And their work should be reviewed periodically. They cannot go unchecked. Finally, they come up with a statement saying that audit has been completed and therefore you just signed the balance sheet. That should not be the case. So that is about the quality control for an audit of financial statements. So the action point here on SA 220 is that, yes, the firm will have a quality policy as a macro quality policy, which would be communicated to the students, and make sure that every report which is going out of this firm is the most appropriate one in the given circumstances, and that the audit has been conducted in compliance with standards on auditing. Chairman, are you there? Selva, is it going okay? Do we need a break or anything like that?
No, sir, we can continue. If at all you need a break, I can flash a screen, sir, or also.
Yeah, I will just mute.
Yes, sir, you can mute yourself. You can rejoin, sir. Have a break. No, you're muted, sir. Now can you unmute yourself? No, you're not audible, sir. You're muted.
Okay, let's resume. Yeah. Planning and audit of financial statements, SA 300. See, audit is an organized activity. Going a little bit into the theory of it, like basics. The audit is an organized activity which has to be completed with a clear objective, to be completed within a given time frame. And it's not devoid of economic considerations. So you fix the fees based on the time that, whether it's a statutory audit or internal audit. Here we more talk about statutory audit, and the team, the time frame, the costing that we do. And based on that, if something which is scheduled, which is ideally done in 10 to 12 days, it gets extended by another 10 days for whatever reason, that doesn't make sense. The economy part of that is also lost. So therefore, goes without saying that the old saying, well planned is half done. Therefore, every audit has to be planned properly. So SA 300 primarily talks about having an overall audit strategy and then breaking down that into a very specific audit plan. Let me ask you a question. We can't answer because we are not face to face. You are not empowered also to answer. But ask this question to yourself: how many of us use an audit program? In a large audit, how many of us do have the practice of having an audit planning memorandum? If it's not there, that is the action point primarily. SA 300, we say that, okay, we have planning. For that, we'll have an audit strategy developed. Okay, large audits, not for very small audits. Any discussion on standards and auditing, let us talk about medium-sized corporate audit. Even in small audits, it's equally applicable. But to understand the theory and apply it, people, maybe some of the members, seniors would think that, oh, this is just theory. That is why I started with certain scary warnings that it is not just theory. The SFIO is aware about auditing standards. The NFR is aware about auditing standards. It is not that Bhavani Madam and Jomon are coming up and just giving a lecture. It's not that. These should not be taken as lectures. I think they should be, if worthy, should be taken as lessons to be applied at work from tomorrow, if not yesterday. Okay, so that's it. So the questions, if they are answered in positive, as we have a detailed audit program, a printed one there, customized for manufacturing organizations, trading organizations, service organizations, tech organizations, NBFCs. You cannot use the audit program of a manufacturing company for NBFC, which would be very easily filled up because most of the pages you would say not applicable. No, that's the lighter side of it. So similarly, NBFCs or different kinds of organizations where we have to customize the audit program. So planning an audit involves establishing an overall audit strategy. The strategy is primarily looking at the time frame, the specific audit considerations in a given situation. All the more so if the assignment is new to you. Or if the client is the client is getting into newer lines of business which is not there last year. For example, an NBFC which is predominantly into housing finance is getting into vehicle finance, retail trade finance. Then there are new audit considerations. So for that you have to develop an audit strategy. Businesses do not remain static; they make rapid strides. So the auditor should catch up with those changes sensibly, so that he is able to do informed reporting. Developing and then for the engagement, developing an audit plan. So overall audit strategy is what I mentioned would be contained in audit planning memorandum. So I didn't complete. So the time frame, the team, the specific audit considerations, observations, or I would say that which would have given the management discussions last year on the key aspects which requires improvement. Internal financial controls. Today, for larger companies, we have this separate report on internal financial controls. But subsequently, it is now it is on ICAI, they say, internal controls or financial reporting process. Therefore, that also should be kept in mind. With all that, you develop an audit strategy, which is a broad plan. Okay, like students when they say, "What's the strategy?" Strategy is that November 21, I'm going to clear final first group. As a broad strategy. And then what is that the plan? Okay, 2 topics I'm not really comfortable, so I should take extra assistance or classes, attend classes, video lectures, more on that specifically. Time frame, then breaking that into. So I have so many months to go. Same is the case with the audit and the audit planning also. The audit, I would say the audit program also may undergo a change as you get into the audit, because the complaint, when we come to evidence again, we'll make a reference back to SA300. So once an overall audit strategy is established, an audit plan can be developed to address various matters identified in the strategy, considering the need to achieve the audit objectives through making best use of auditors' resources. The requirements are specific: involvement of key engagement team members. Larger audits, again, to say that it should not be left to inexperienced juniors. Preliminary engagement activities, I did mention. If it's a new audit, knowledge of business is very important. Knowledge of business. We had a separate standard. It was originally AIS 20, knowledge of business, but today it is been subsumed into SA 315, understanding an entity and its environment and risk assessment based on that. The audit risk has to be assessed by having a proper understanding of entity and its environment. That is SA 315. That's all. That in fact the study and evaluation of internal controls is contained in there. The knowledge of business is contained in there. Earlier there was one more standard: auditing in a computerized CIS environment, computerized information system environment. These 3 standards have been combined into SA 315. Very, very important standard. So preliminary engagement activities would say that, okay, we have this, and therefore all this gaining of knowledge of business and newer lines of business, etc. Audit team, strategizing, all that's very important. Planning activities, and finally an audit plan. This clearly says that the audit planning for this year would ideally commence the conclusion of previous year's audit while organizing, assembling the audit file itself. Certain things which is relevant towards the next year, if we are continuing, normally we continue, right? Except when there is audit rotation. So that again, that would be highlighted, and that's a starting point. For an initial audit, the auditor may need to expand the planning activities because the auditor does not ordinarily have previous experience with the entity that is concerned while planning recurring engagements. Very important. And we have a standard, I think it's SA 510, which is initial engagements opening balances, specifically on opening balances, SA 510. So given that initial engagements, one has to be really extremely careful about the standards. Let me double check the standard number. Yeah, SA 510 initial audit engagements opening balances. So one has to be extremely careful first time. In-depth meeting with the management, meeting with the finance team, all that would be required. And today what I'm seeing is the communication channels are not formal. Over the phone it happens, but then formalize a little bit. Make client visits, make sure that the client exists. When it comes to SA 501, it will become clearer. Engagement partner and other key members of the engagement team shall be engaged in planning and discussion among engagement team members so as to enhance effectiveness. This is what I mentioned earlier. There cannot be a one-time exercise. During the course of the audit also, the plans will have to be reviewed and the directions have to be given. Overall audit strategy we have seen. And quickly recapping on what we had discussed, direction, supervision, review of the students and the assistants, audit assistants or engagement team rather, and the work done. Changes to planning decisions during the audit. This can happen because what happens is you had developed a strategy based on certain comfort on the internal controls. Doing an audit, maybe 10 days into the audit, you understand that many of the assurances which have been given, many of the assertions which have been made are actually not there. So the reliability of information, the credibility of the people who explain things would become questionable. Then you would probably go for larger extent of substantive procedures. It could be vouching, it could be verification, it could be visit to remote locations, it could be observing certain processes, it could be asking for more of documents. All those things are very important. That's something which one has to keep in mind. Consideration initial audit engagements we have seen, and the entire planning exercise, that is the audit strategy or rather the audit planning memorandum and the audit program has to be properly filled up, signed and kept. Today, some of the documents we do not have hard copies. When you ask a student to show the ledger analysis notes, he or she would say that, sir, that's in the client's folder under LS notes, ledger scrutiny notes. There's a separate Excel sheet which is LS notes, which is on this. Earlier we used to have that student coming with the thick box file and saying that, sir, these are the LS notes. So then the exceptions are highlighted. It's easier to go through, and that is how it is. When the documentation, either physical or system-based documentation, has to be properly done. That's very, very important. That's about SA 300. Moving on, so very, very, very important standard SA 500 audit evidence. Evidence is very, very important because audit, the end product of an audit, the end product of an audit is an opinion. End product of an audit is an opinion. Therefore, the auditor needs evidence to establish, or rather to form an opinion on the financial statements. And SA 200, the basic standard, says that the auditor should obtain sufficient appropriate evidence to base his opinion on the financial statements. With that intro, let me move on to the specifics. Information used by the auditor or is arriving at conclusions on which the auditor's opinion is based is known as audit evidence. Broad classifications of audit evidence: documentary evidence, visual evidence, oral evidence, external evidence come from outside the organization, internal evidence, all those things, and external evidence coming directly from an outside agency instead of routing it through the client. Now, after the Satyam issue, many of the larger firms started collecting bank confirmations directly because they were scared that if it comes through the client, it could be tinkered and tampered, and therefore that is a practice there. The main contents of SA 500 is, as usual, introduction, objective, definition, and finally the detailed requirements of collecting and using evidence. It explains what constitutes audit evidence in an audit of financial statements. And I don't think we have to explain at this point of time. Anything that is relevant for the purpose of forming an opinion on financial statements of any entity during the course of an audit can be called audit evidence. The auditor should design and perform audit procedures to obtain sufficient appropriate audit evidence, and applies to all the audit evidence obtained during the course of the audit. This is highlighted here. Draw conclusions. Now, the requirements when we come to, the auditor should evaluate the information that he would be using it as audit evidence. And based on that, he should select items for testing to obtain audit evidence. This refers to audit sampling. We have a separate standard on audit sampling. And today, in the given circumstances, we should do all that is possible to ensure that the selected sample is random, and the randomness of the sample should be ensured, even using statistical methods, which I am not using, I have not started using, but mostly we are resorting to judgment sampling. So sensibly, judiciously selecting the items to obtain audit evidence is very important. And then if there is any inconsistency or doubts about the reliability of audit evidence, yes, that would require deep dives. You should analyze that in detail. And with all that, he would finally collect sufficient appropriate audit evidence. This term sufficient appropriate is very relevant. Sufficiency talks about the quantity of evidence. How much do we need? Appropriateness is relevance and reliability of providing. You say that I have 3 thick box files of audit evidence, but is that really relevant? Particularly when it talks about forming an opinion, issuing a clean report. You would have had so many doubts, so many questions would have been raised during the course of the audit. Has that been discussed, answered, and documented? And that is taken as evidence. The documents which are given or the explanations that are given, all that is taken as evidence. Therefore, that is the reliability and the relevance of evidence is what is known as sufficient, appropriate evidence. Sufficiency is about the quantity of evidence. These are basics, but the standard calls for a discussion on this. The audit techniques that we use to collect evidence are inspection, observation, confirmation, recalculation. Inspection, physical verification of cash. Observation, observing the physical inventory verification. Confirmation, obtaining confirmation of balances from banks. Confirmation of documents, originals of documents kept by them, for example, a title deed of a property. Thirdly, confirmation of materials which are held by a subcontractor or outsourced agency and so on. Recalculation, sometimes take for example depreciation or deferred tax calculation done by the management. Most of the cases we do it ourselves, but if they have done it, we have to recalculate. There have been instances where the calculations were sometimes intentionally wrong and major irregularities were checked, because you can play around with an Excel sheet, and that has actually happened in my experience. Re-performance of certain things which have already been done. Inquiry, asking a lot of relevant questions. And lastly, very importantly, analytical procedures, trend analysis, ratio analysis, and so on. Based on auditor's opinion obtained by risk assessment procedures, and 2 types of procedures. Risk assessment, yes, audit risk has to be evaluated with an understanding of the entity and the situations, the business specific situations. For example, the threat posed by COVID, an NBSC would ideally like to reduce certain provisions, hide the real picture of bad loans which would have launched. And today our economy, we talk about having even a bad bank to transfer all the bad loans to make the banking system healthy and so on. So therefore, audit risk, what is audit risk? Audit risk is the risk of expressing an inappropriate opinion. When one should have said that X is not a good boy, you're saying that X is a good boy. An inappropriate opinion is the audit risk. It has many components, detection risk, valuation risk, control risk, and so on. And therefore, the risk assessment procedures, and then we have test of controls and substantive procedures. Test of controls are, again, we talk about internal financial controls, right? There's a separate requirement under the Companies Act in the 143. Many of us issue the reports. Internal financial controls. And here, test of controls in an audit would ideally, the first round of compliance procedures. Test of controls known as compliance procedures. The first round of compliance procedures should ideally precede any substantive procedure. Before we getting into vouching or verification or inspection or all the techniques we referred to, have a basic understanding of the internal controls. From the financial reporting point of view, how frequent are accounts taken? Like for example, we see even in medium-sized corporates, we see that there is no regular practice of internal finance meetings. Some Excel reports given by the finance manager is relied upon. Therefore, how frequent are accounts reconciled and the reports taken and so on. So all these things are, one has to be clearly evaluating what is the organizational hierarchy, what is the reporting which is taking place. Control over assets. Data security today, password controls and data security. How is that the data is protected, sensitive information is protected, and so on. So compliance procedures refers to the whole government of checking of controls, internal controls in the organization. And if they are found to be strong and robust, theoretically, or even practically also, the auditor gets certain comfort that, okay, there is a system of internal controls, therefore I don't have to. So there is an internal audit, okay, and there are periodical meetings. The audit committee is very serious about it. The audit committee is qualified professionals. Independent directors are quite focused. With all that, the auditor gets certain comfort and say that based on that, let me reduce the extent of substantive procedures. Let me reduce the extent of substantive procedures, and therefore that is how it is done. But if the controls are found to be weak, the auditor would completely enhance or enlarge the substantive procedures, do more of document verification, asset verification, more frequent visit to the client premises, or rather, then of course, really screening it with, again, taking with a punch of salt. With extra skepticism, he would approach the management explanations and so on. And based on that, substantive procedures are done to either, dispel or confirm that there is some irregularity, or that the assertions given by the management are not reliable. When information to be used as audit evidence has been prepared using the work of management's expert, we have a separate standard on that. To the extent necessary, the auditor should evaluate the competence and objectivity of the experts. For example, valuation of assets sometimes. Valuation of assets, useful life of assets, based on various things, the actuarial valuations which are done. Based on all that, the auditor should evaluate. Don't take it for just like that because it's an expert. It could be a so-called expert as well. So you should do that and obtain an understanding of the work of the expert, and evaluate the appropriateness of expert's work in using it as audit evidence. It's not that, okay, there is a evaluation report, okay, fine, keep it fine. Evaluate that objectively, that's very important. Now, using information produced by the entity, that is internally generated information, the auditor should evaluate whether the information is reliable, obtaining audit evidence about the accuracy and completeness of the information, and that is sufficiently precise and detailed for the auditor's purpose. There also we can happen, with your experience, maybe a lot of senior members virtually with us, there's sometimes a lot of reluctance to give the information on a timely basis, and they put a lot of pressure on completing the audit. Like in a bank audit, they would ask you, the first question they would ask you is, before even saying good morning, when will you finish the audit? They want it to be finished in 2-3 days time, but things are changing in that sphere also. So here, any internally generated information also has to be screened, filtered, and evaluated constructively before placing reliance on them. This is a very important aspect of audit evidence. Means of selecting items for testing that are effective in meeting audit objectives. This is where I mentioned about the sensible audit sampling that we have to do. If it's a small entity, the auditor can, of course, time permits to go for selecting 100% verification. That is where people are threatening us that, okay, once robots come or RPAs, robotic process automation comes, 100% vouching would become possible even in large organizations, because they do not have to go home, they do not require tea breaks, they do not get calls from their spouses and so on. And therefore, 100% verification, yes, that is one method. And then audit sampling. Again, there we make sure that stratification of data is very important. Where the data is heterogeneous, stratification. For example, in Kerala, we do the audit of a resort. We say that, okay, season 2 months and off season 1 month. Pick it up for vouching or verification or ledger analysis and so on. So therefore, that kind of different businesses, it has to be stratified and audit sample has to be selected sensibly. Here again, it talks about the crux of this particular slide is the auditor should corroborate evidence received from various sources. For example, if somebody asks, yesterday I got a call from a chartered accountant to inquire about a family. The girl is a chartered accountant. This chartered accountant's son is also a chartered accountant. So they are planning to have a proposal and therefore to inquire about this girl. Take for example, we get good information from the firm. She did positive about the information, very positive, not from the principal where she did articles. And then you also have access to the college where she studied. And if they are not consistent, for example, they're saying that no, that may not be an ideal case. For example, if the college says that I wonder how she passed that accounting because she was a problem child all the time, then we cannot jump into a conclusion. So we should try to corroborate and see how this inconsistency can be resolved. Same is the case with audit evidence. Collect all the evidence, ask more questions, deep drills, deep dives we'll have to do, and inconsistency has to be resolved. This is about the requirement identifying information that's inconsistent. Here, SA 230, the standard on documentation, very specifically requires the auditor to substantially document the example which I gave. There has been inconsistency on the reliability of evidence received from various sources. Therefore, it could not be relied upon. So finally came to a conclusion saying that yes, still there was some inconsistency, but for extra reasons added, documented, the opinion is positive, or rather it's a clean opinion. So on the story goes. That brings us to SA 501. It's a very small standard. It deals with 3 specific items. Special considerations for selected items. 3 specific items I have highlighted that the auditor should have specific considerations. Inventory, litigations and claims involving the entity, pending litigations, and segment information. This is an extension of SA 500. The standard requires the auditor to have some extra thrust on these 3 areas while doing the audit of an entity. Let's take it up one by one. Inventory, again, a very, very important thing. If there is a substantial value of inventory, this is being played around by many companies, many clients. Inventory records may not be updated intentionally. They may have a separate record which is not shown to the auditor. Obsolete material would have been lying there, which is valued at full value. We had a situation where a new audit came to us, and then there was some non-moving inventory of their valued at the purchase price itself, because they were into a specific area of business. The color, which was slightly very odd color, and this is an excess quantity left after an order was executed. And that order also halfway through got reduced almost half in size, which resulted in excess raw material of that particular customized contract remaining there. It was a very odd blue color sheets, which I used for some lab furnishing and all that. And waited for 1 year. This is remaining as it is, and they said the write down would be required. And finally he said, no, we'll get an order. Then 1 more year we waited. Of course, the second year we said yes, this has to be really written down. Cannot be carried at cost because not been moving for it. And he was so I would say that there's a lot of resistance. And finally, over a period of 2-3 years, the whole thing was written off by reducing by 20%, 30%, and things like that. So these kind of things can happen. Here, the trust is not just about I would say that the usability of inventory. It is more about the existence and condition of the inventory, and this standard requires the auditor to physically attend the stock verification. How many of us are doing that now? Okay, SF 500, I think we left out the action point. Okay, we go back to SF 500 for a minute. What is the action in SF 500? The audit will not be taken as a compilation. The audit that we are taking, or the action point is, the company audit is not a compilation of financial statements. The students sometimes, when you ask them how far have the audit progressed, the student would sometimes say, sir, the statements have been taken, balance sheet and P&L has been taken. Is that part of an audit? Strictly speaking, no. But all of us are assisting. There's no difference whether we sit in Kochi, Chennai, Coimbatore, Mumbai, Delhi, New York, London, everywhere. Smaller clients, even listed companies, some of them are not able to prepare Companies Act compliant, Ind AS compliant financial statements. With the due respect to many of my fellow colleagues in the industry, I'm not generalizing, but many of the organizations, we feel that domain knowledge, that readiness, that resourcefulness is not there. Therefore, we help them. So the action point on SF 500 is that I would collect sufficient appropriate evidence, document it properly, do all those techniques of inspection, physical verification, analytical procedures, and so on. And based on that, only I would form the opinion on financial statements. So SF 500, sufficient appropriate evidence. Back to SF 501 here. Attend a physical inventory counting. Now, how many of us do that? And the managements have general reluctance. If I ask a question over a phone or something, the finance manager would say that, sir, we are doing it every month. Physical verification every month, then we would do it. Then the second question is, do you have any internal reports? Sir, there are no internal reports. We trust people, they do it, and they come and say that there are no major issues. Now, then there again we become skeptical. All the 12 months, we are doing it on a monthly basis. Not a single report has been generated. Like bank account reconciliation. I'm talking about very basic aspects of audit. Today, technology has made a lot of changes, but then the audit considerations still remain relevant. All these audit considerations remain relevant. I distinctly recall what our legendary Y.H. Malagam sir once said. Talking too much about technology, we are leaving out details of transactions. That cannot happen. So transactions, analyzing details of transactions are still very important, irrespective of how much of leverage you are on technology, what are the new methodologies, what are the businesses. It's very important. So therefore, this has to be taken very, very seriously, and we cannot leave out these details of transactions. So physical inventory counting, it is not that the senior auditor or partner has to, engagement partner has to go. Make sure that we are coming to that here. Evaluate the management procedures for verification. Do they have any plan? Or what we do is, say March 31st, by 20th of March, we send a letter. We send out letters to all the clients who have substantial value of inventory, quantity of inventory, saying that please let us know your program for physical inventory verification with the data and the team. We would like to depute our team to oversee the work. And we get a response. Sometimes we don't get a response. Send a second letter and make sure that our team goes there. And we ask them to send a vehicle, and then the team goes there, and then they observe. Look at the second bullet point. Observe the verification. Not that our boys and girls have to do the physical count. I remember doing it as a young chartered accountant, new in practice, used to go in denim jeans and a black T-shirt, so that the carbon black does not spoil your cloth and it doesn't change the color of your this thing. And therefore, we have been to the shop floor experience is completely different. which should be experienced and seen that, then you get an understanding of what is work in progress, what are the stages of production, etc., and so on. That knowledge is very important when you come to valuation of, let's say, WIP. Inspect the inventory. Test basis, you can do that. Inspect them for quality. For example, I go to a pharma unit, pharma manufacturing unit, pharmaceutical unit. Possible that some of them would have got outdated. They call it, they are date sensitive products. Okay, shelf life is very limited, and pharma products beyond that date not only can be used, they have to be destroyed. All right, so there are many specific items. Even the beverages that we bring, the real juice or all those things which we buy beyond date, they cannot be used, and therefore that inspecting the inventory helps that way also. Test counts we have to do. Reconcile if verification is done, is not done on the closing date. See, last year typically 31st March, none of us could do verification. So by the time factories reopened, maybe it was May or June, then luckily between the intervening period there was not much of transaction or production, and therefore they said, okay, this was fine, and we work back. Today, if you are not able to do on 31st March, you're doing it on, let's say, 5th April, then the transactions in between have to be seen. The movement of goods have to be seen, physical movement, and the raw material, work in progress, finished goods, all have to be reconciled. It has been got done. And lastly, very importantly, let's insist on authenticated physical verification reports. There's physical inventory of substantial value. This is about inventories. The second item which is covered in SF 501, specific considerations required, is litigations and claims. Here, the risk of the management hiding or not disclosing to the auditor high stake disputes, where there's a huge claim. It could be on product quality, it could be on warranty violation, or whatever, or legal issues. For example, there's a huge income tax demand, a GST non-compliance demand. Today, GST is very aggressive for non-compliances. Cancelled registrations are getting cancelled. We get calls from GST if there is a slight delay of a week. So that way of enforcement, one way is good, but the people who feel that, okay, there is some bit of, as they call it, tax terrorism, which is scaring away SSCs. So it's just a personal view. Sometimes that much of enforcement, whether it's required or not, is missing. And with all that, GST audit has been taken away, saying that the cost of compliance is high. There are differing views on that. Coming back to this, again, the management, we should do a lot of inquiry in the management, and including the in-house legal counsel, we should have transactions to get the complete list of litigations raised by and against, most importantly, against the company or the entity, to get a complete list. And it should be included in the letter of representation also. Say 580 is letter of representation. Reviewing minutes of board meetings and correspondence with external legal counsel. Sometimes they may not give. This standard also talks about, yes, if there is a refusal by the external legal counsel to give information on a particular dispute, and the management is refusing you to have access to the external legal counsel, the standard says that the auditor may have to modify. SA 705 uses the term modify, but the older term which we are used to is auditor may have to qualify his report. And lastly, also review the legal expense accounts. Legal and professional charges, when you see advocates bill and things like that, based on that, you can find out what is this bill raised for, what is the case, where is the, if there is an appeal, for example, appeal filed, we would like to get the details of the appeal, and we may have to show it either as a definite liability, or if not as a contingent liability, the disclosures will have to be. So inventories, then litigations and claims which have to be disclosed completely, to have the reader to have the complete understanding of the financial statements properly. The third one, which is the segment information. The financial reporting framework we have is talking about Accounting Standard 17, which deals with segment reporting. Segmental information is required to be disclosed by non-SMCs. That is, according to accounting standards rules, the non-SMCs, small and medium companies, are not required to comply with AS 17. and level 1 enterprises. Incidentally, let me also say that there is a new classification. The institute has come out with the 4th category, category 4, and in non-corporate entities. This level 1, level 2, level 3, level 4 is non-corporate entities, where the level 1, level 2, level 3 has also been aligned with the MSME thresholds, the monetary limits which have been set on turnover and borrowings. Easy to remember. Level 2, 10 and 50. 2 crores, 10 crores, 50 crores is the limit, borrowing limit for, the level 1, level 2, level 3, level 3, level 2, level 1. Multiply by 5, you will get, it's a separate classification. And again, the new journal, the institute's journal, it is there, completely new notification. The council decision has come on classification of reporting non-corporate reporting entities into level 1, level 2, level 3, and level 4. About the journal, I am repeatedly referring that the journal of the institute carries the reservoir of knowledge. So every member should find it difficult, find time to refer through and at least share between the partners their areas of interest, which is very important. So earlier there was, about the journal, people used to say that the journal is never read, and the journal is never taken out of the plastic cover, which used to come in a plastic cover, until and unless there is a need for a plastic cover. So, but then Institute is taking a lot of efforts. It's very, very informative document. It has to be stored, kept, and referred periodically. This time around, I said the article on 240, the section 240 by P.S. Kumar sir, the disciplinary committee decision on an SRS 4410. Again, this the categorization of non-corporate reporting entities for the purpose of complying with accounting standards. So many things which are relevant, which are referred to in this journal. Okay. The segmental reporting here, that segment reporting is, if you look at AS 17, something called the business segment and the geographical segment. On a macro scale, if you can say, there is a 10% criteria, 10% of the turnover, 10% of the assets, 10% of the profits. Based on that, you have to decide whether there is a separate business segments. The rewards and risks associated are different. You have multiple products where one products are not really related. They are serving different markets. Again, geographical segmentation is secured. So either a business segment or geographical segment, as if it's identifiable. If reporting is done, the auditor should evaluate the methodologies followed by the management, methods formed by the management, and also perform analytical procedures. This way, that way, the 10% kind of procedures the auditor should follow. So 3 things, specific considerations required: inventories, litigations and claims, and of course segmental information. It's a very brief standard. The content of the standard runs into just 1-2 pages, and then you have, of course, explanatory notes given under every standard. That's the way standards are now presented by the AISB now. And there's also a comparison with the international standards in auditing. Deviations and carve-outs from that also is highlighted. That brings us to the last standard. I had taken permission of the chairman because I have another meeting which got scheduled all of a sudden. So I would like to conclude by 7, but we'll take the questions possibly by 7 or a little later. So this is the last standard which is allotted to me: written representations, SA 58. Now the point here to be established rather. So again, 501, the action points. What are the action points? If this is an interactive meeting, I would have surely had inputs from the audience. SA 501 is that, yes, if inventory value is substantial, I will not just take a sheet of paper as physical verification report from the management. I would depute my team, and if it is of high value for academics, younger members, I would say worth making a visit to the factory premises or premises where the products are kept. It could be a warehouse, a go down, wherever, and that would be done. I would be more sensitive and cautious about the non-disclosure of pending litigations and claims against the entity. And thirdly, if there is segment reporting is applicable, make sure that IAS 17 is complied with by performing analytical procedures, and also try to understand the methods used by the management in segmentation as well as in presentation. And also it calls for IAS 17 calls for a reconciliation. You're saying that product A segment, product B segment, and that the total has to be reconciled with the figures presented in the financial statement. So that is the action point on SF 501. Now, the last standard, which is SF 580, written representation. During the course of an audit, the management gives a lot of explanations. Inquiry and confirmation it is called. One of the methods of collecting evidence is ask questions, ask relevant questions, and then the management gives representations, replies to those. But then these replies, some of them, they always said that it can be volatile. Sometimes, like political statements, they can disown these statements. Therefore, it makes sense to get all these management assertions in writing. That is precisely what the standard is about. Written representations are written statements obtained from the management to corroborate the validity of premises relating to management responsibilities on which the audit is conducted, the other audit evidence obtained with regard to specific assertions in financial statements. Nothing technical there. The management has to acknowledge its responsibility. SF 580 very clearly says that it is our responsibility to prepare financial statements. I'm coming to that specific points. Now, the auditor should obtain written representation of the management with appropriate responsibilities for financial statements and knowledge of matters concerned. It should clearly state the management has fulfilled their responsibility for the preparation and presentation of financial statements in accordance with the applicable financial reporting framework. Sounds theoretical, but we must obtain this. Maybe we help them in doing this, but then even then, the management should acknowledge its responsibility, saying that it is our responsibility to prepare financial statements in accordance with Schedule 3 in compliance with accounting standards which are referred to in 133 of the Companies Act 2013 and so on, and that the financial reporting framework has been duly complied with. We are also responsible for designing and implementing, maintaining adequate internal control systems. One is also reminded of the director's responsibility statement, which used to be there in the old format of the director's report. The directors of a company are bearing, committing on their responsibility, to have proper internal control systems. Completeness of information made available to the auditor, that nothing is hidden, nothing is set aside, or rather, not disclosed to the auditor. Everything has been disclosed to the auditor. The management should bear witness to that. Based on this, the auditor should objectively evaluate the reliability of written representations, and in case of doubt, take appropriate action. Now, there are two situations. One is that there is an abrupt denial of, blatant denial of giving. We cannot give this kind of representation. You are doing the audit. In layman's terms, normally we have come across situations where we try to enforce, saying that if we have to give all this, what are you doing? That cannot be considered to. That cannot be agreed upon. This has to be got in writing. And if there is a reluctance, or rather resistance, to give this information, then how can the auditor say that we have obtained all the information and explanations considered relevant for the purpose of an audit? So this would essentially then become a limitation on the scope of the audit, that the auditor may have to go for a qualified report. That is what SF 580 tells us to do. And a representation letter is not a substitute for other audit exercises which the auditor should normally conduct. In the first part of the standards discussion, we found that this is only to corroborate the work that we do, the evidence that we have collected, with additional assertions from the management. Yes, we agree on our responsibility. Yes, we are giving all the information. That all the provisions, secured provisions, have been made. Long-term contracts there are no losses foreseeable on long-term contracts. Internal financial controls are in place. We have internal audit. We have internal checks, staff rotation, and so on. And SA 580, quite like as I mentioned, SA 210, letter of engagement, we call it in our office. We call it LOR, letter of representation or management representation, SA 580 as an appendix to that. We have the appendix to that. We have a sample of a letter of representation. One should take it out and then follow. Who should sign this? Ideally by the top management, by the managing director or the finance director. The accountant level, if he signs it, is not there. It should be, if there's an audit committee, yes, this should be part of the discussion of the audit committee. And then based on that, the MD or the finance director should sign. Last point, as we have seen that, the auditors will tantamount to not being able to obtain sufficient appropriate evidence if there is, a denial, and therefore he'll have to disclaim an opinion on the financial statements when requested information is not fully given. I said a qualified opinion. Here it's more in the nature of a disclaimer that it will happen. Okay. So that brings us to the end of the allotted standards. But since I mentioned earlier, Selva, I would probably stop sharing, and
Okay,
then I would do one thing. I would finish that part of it, say thank you in advance, and then discuss something which is slightly outside the topic, but very relevant. I have to sharing is that the signal stop. Let me see.
you stop the slideshow and then you can stop sharing. Yeah, now it's stopped, so you can continue the video system.
But I am still seeing it on my screen. I think I'll close that.
You stop. You can come to that. You can stop the slideshow, so escape, and then you can come to the application window where you can see yourself.
Webcam is on, right?
Yes, it's on, sir. We can see yourself. We can see you.
So how do we see the screen? The chairman, the secretary.
Under webcam dropdown, you can see show all webcams, sir. In the right side, you have orange arrow mark where you can see webcam dropdown, right? Right next
webcam dropdown is yeah.
Under that webcam dropdown, you can see show all webcam option where you can see everyone. Anyway, you're visible to us.
Okay, fine. Yeah, right. That is about the 5 standards which was allotted to me. And as I mentioned earlier, 2 things are very important. One is SRS 4410, Standard on Related Services. Ideally deals with compilation engagements. Take, for example, a non-corporate client with a turnover of, let's say, 80 lakhs, not coming under 4480, approaching you to prepare financial statement, or typically says that, sir, my accounts are to be audited. Okay. Now, is there an audit required? What is that we are doing? It's not an audit. We are only helping the client to prepare presentable financial statements. 1, to enable him to file the income tax return. 2, probably he has a facility from a bank, so the banker asks for a audited financial statements. This is a wrong notion. In both these situations, in the case of a tax filing, there is no requirement that the financial statements are to be signed by the chartered accountant or the so-called auditors. It's not audit. In a compilation engagement, SRS 4410 is very clear that it should not be mentioned. Audit, the term audit should not be mentioned anywhere. So, prepared from the books of accounts produced before us and on the basis of information given to us is not allowed. That is gone. SRS 4410 says in such cases, you do a compilation and issue a compilation report. There also, in this disciplinary case which I was referring to, reported in the latest journal, that is just an eyewash. The compilation report was an eyewash. He didn't have, probably even a trial balance was not there. From nowhere prepared financial statements and issued a compilation report. So one has to approach that. So the point here is provisional financial statements should not be signed. The banker wants that to be signed. He wants some seal, some ink and some signature of a chartered accountant. And I've seen chartered accountant signing subject to audit. Don't do that. It is not allowed. Subject to audit, what is the chartered auditor doing? Financial statements, only compilation report, SRS 441. The second one is, one step further, the bank manager would also want 3 years projected financial statements. We probably help a client prepare that, but we never attach our name to it. But then the manager would say, no, this also has to be signed by the chartered account auditor. You cannot do that. If at all you want to associate financial name with prospective financial information, the term used is prospective financial information. Now 21-22 provisional, 21-22 21 March provisional audit is not done. No, 21 provisional, 21-22, 22-23, 23-24 projected. We cannot sign that. If at all that has to be done, please refer SAE 3400, Standard on Assurance Engagement 3400, which tells you if at all you want to associate, but try not to attest provisional and projected financial statement. They both are, in the way we are doing now, both are banned, which can invite disciplinary action. So these are the things which I thought are very important in addition to the standards allotted to me. So it is nice that SIRC organized this program. I hope we have 277 attendees as of now, and we have covered the standards fairly in detail. So therefore, now I'll move on with the permission. I think Selva has listed these questions. So
we have questions, sir. So if time permits, we can take it.
Yeah. In many small case, no records maintained items they deal are substantial items. How to protect our interest? They never give any valuation, but physical stock excess value also matches what is accounted. Documents and evidence are poor. C.A. Kumarasamy sir has asked. Sir, that's romba dangerous, sir. We should do that. If the value is substantial, small clients' value is substantial. Substantial is not running in crores. To the size of the balance sheet. Balance sheet size is, let us say, only a crore, and inventory is, let's say, 20 lakhs. We have to take all the care which is applicable. The big and small difference should not be there. That is my point. Non-moving inventory versus true and fair value. Can you brief? Non-moving for 3 years. How to say non-moving? And also, plant and machinery not used for 3 years. 4th year it is used to produce, just to show. Though it produces at 100% capacity, but recent machine can produce 100% production 1 hour, whereas old machine can produce 1 day same 100% production. How true and fair is affected? Vegan Chinna Murli. Okay. Sir, non-moving inventory, we also have an idea about the various items which are being sold in the market and about this client's performance itself with the products. So some of the products are remaining raw materials, for example. I gave you a practical example. Raw materials are not moving for 3 years, then it cannot be valued at cost. It has to be written down. Realizable value is there also, we do not know, but some write downs have to be there. In our case, where I mentioned, though the client was not happy, over a period of time, the whole thing was, and even after that, then the audit rotation came. So even after that, I don't think they could have solved it because color was so odd. So methodologies are there, non-moving for 3 years, meaning that they cannot fetch the cost anyway. They are outdated and obsolete. Therefore, that has to be written down. Machinery also, sir, if it's a larger entity, you have to apply test of impairment as in accounting standard 28. If they have impaired, yes, then we have to write down the machinery, impairment losses, additional depreciation has to be done. And if obsolete, as you said, new machine can replace, the old machine has to be scrapped and shown only at nominal value in the balance sheet. Next question. During the process of audit of a company running a hospital, there are litigation for deficiency of services. The particular professional is a first party and company is second party. Do we need to disclose such litigation since particular professional has indemnity insurance? The financial impact or may not be on the company. How we disclose the manner it is to be disclosed. Well, if there is the defense possible with indemnity insurance and the company not likely to have a claim, then it is not required to be provided for. But in any case, if the claim is huge and if indemnity insurance no 100% sure, I would suggest that ask the management to show it as a contingent liability. Anyhow, client is signing financial statements and they know they are responsible. merely getting a letter from him, how the auditor is getting comfort letter from unless we seek specific clarifications in writing. Yes, sir. I would like you to, I hope you have gone through SA 580 as an appendix to SA 580. We have a format of a letter of representation. In that, we have a general commitment as client is signing financial statements. But then in addition to that, it is an international practice to get it in writing, a representation letter. One on the general aspects of it, though they are just reiterating that while signing, we are owning it up primarily. And then second part is there are a lot of specifics. What you mentioned, the last part is very clear, unless we specific clarifications in writing. No, this time around, there are a lot of cases where, take for example, again, NBFC example I'm giving, moratorium, the ex gratia, all those things. What is the stand they have taken? Or in a particular case, the situation is very specific answers have to be obtained on specific. That also should be there. In addition to the generic confirmation on their responsibility. Specific inventories existed, for example, inventories existed. Physical balance of cash was so much. I'll give an example. The company is operating 3 bank accounts, namely SBI, Corporation Bank. Corporation is not there, Union Bank. Let's say Tamil Nadu Mercantile Bank. The company does not have any other bank account. And the confirmation is required. So that is how it is. So when you read through the SA 580 appendix letter of representation in detail, you would understand the spirit of it. I think we are on the same page. We are not disputing. For extra comfort,
Those were the questions.
Any more questions, Selva?
Those were the questions I'm asked for discussion on SRS 4410, and you have already discussed very briefly.
Yeah. SRS 14440. Very carefully approach compilation engagements. Since I did my articles in Chennai, I think this expression is right. Ekka chekka sign pannadinge. Correct, Selva. And the chairman has come.
Yes.
Yes,
I'm
sir,
blind.
yes, sir.
I'm not able to see. I'm not able to see the screen.
Thank you, sir.
Yes, sir. We are all
Secretary.
able to see, sir.
Can we close it, sir?
Thank you.
Yes,
Thank you so much, my chairman.
Yes.
Today we had a well-meaning discussion and almost around 300 members attending throughout the session. I hope members understand the seriousness of the standard of auditing. It seems a good signing for the institute and other stakeholders. With this, I request Panara sir to propose a formal vote of thanks for our my chairman.
Chairman sir, you can announce tomorrow the program also, because members they know that. But
Yes, sir. Yes, sir. So
Yes,
thank you
sir.
very much for the presentation, sir. It was very practical, in the sense more of practical sides are there, and the attendance is really encouraging, because this topic many would not take a lot of interest, thinking that it's only for companies. You are stressing that it is for non-companies also, it is so important, and for small business also is very important, and affixing the signature has become so common, and especially youngsters. In many of our cases, when we say we don't attest them, they go to young CAs and they are getting these things done, and that is the caution that you have given, that it should not be indiscriminately used so far as used earlier. So just many of us think that if the bankers ask, we should give. That we should come out of that, and we are governed by these standards and auditing. And the institute also, as you rightly said, made 2 topics very mandatory for each branch for 2 hours: standards and auditing, and also on code of ethics, which are very, very crucial. I think in the days to come, there will be most of the discipline cases would be on these things, because the level of importance that is to be given by our members is not yet seen. It is unfortunate, but still, I caution the members here to caution others, your friends and other people also, to get alerted and see that the compliances are really followed. So with these words, I thank you, Jomon sir, for your time, and as usual, you are so cool, and representations are so catchy. and very acceptable and very receptive to the members. That shows.
Thank you, sir.
I think it was 175, 180. It came to almost 300 by the time it is closing. That shows the people who have joined have never left. So
we still have about 260 with us. They are signing off one by one. Before concluding, let me thank Chairman and Secretary once again, and all the participants for staying through and also for asking the relevant questions. Back to you, Secretary.
Thank you all the delegates also. Because of your participation, we are able to do such programs. And I thank the chairman for selecting this topic, and also the SIRC office for support, and Selva, very importantly, for the back support, technical support. I request you all to attend tomorrow also for the second day, and also register yourself for the 12th program. It is on transfer pricing. I request all the delegates to use the Telegram app, wherein the programs of the SIRC are posted. From today only it is started, it seems, and the programs regularly what are there, we will be able to watch from that Telegram app exclusively from SIRC group. So thank you very much for the day, and see you all again tomorrow. Thank you very much.
Thank you, Chairman. Bye.
Thank you, sir. Thank you, Jomon sir. Thank you. Be safe. Good night.
Good night. Bye. Stay safe.